So actually, we're a venture fund, as she explained. We're now investing out of our third fund. It's a $200 million fund. Prior to this, our previous fund was about $150 million. And we got exposed to the food industry actually through Rebel. And I know you heard from Sagar earlier today, and I'll talk a little bit about that and what we learned about food through that journey as well. But actually, I thought I'd take a step back in general and just explain a little bit about what, as a fund, we look for in businesses. Because I'd imagine many of you, or some of you at least, might be thinking about funding at some point, or might already have funding, might be looking at scaling that up. So I thought maybe we'll just chat a little bit about what that is. For us, as a fund, what we look at is actually building tech-enabled businesses. And what I mean by that is, when I started out in 2005, we actually came to India with the perspective of saying, let's replicate a lot of businesses that existed in the West. And these were primarily platform businesses, where technology was the sole advantage that someone had. And we really didn't want to get involved in making or building anything. We didn't want to touch that product. We wanted to be distribution businesses. And I think over the course of, I would say really from 2012 on, we started to appreciate the fact that because of the fragmentation that exists in India, there's actually a phenomenal opportunity to actually leverage technology either in the production of a product, the distribution of a product, or the acquisition of customers. If you think about technology in one of these three areas and think about the role it can play, I think you actually get into a world where you're saying, I'm comfortable actually building the product. So that's how we ended up in businesses like Furlenco, where we actually manufacture furniture and rent it out, or as we talked about earlier, Rebel. So for us, it's really about building, not betting. In our fund, we are early investors in businesses. We go in usually even at a PowerPoint stage. So we have a small portfolio. We get deeply involved in the businesses. And what I mean by that is our success is tied directly to the success of the companies we invest in. For a fund that invests at the early stage, as we do, we only have 8 companies in our fund. So that's not distributing our risk very tremendously. And so if we're going to do that, then that means we're going to have to be deeply involved in our companies. And we do this all in businesses where we do believe that data and technology will be the differentiator. Now, it's interesting, again, if I go back to 2005, that was our sole premise. As time has evolved, we've said that data and technology is one pillar, the other is really brands. And as I go, I'll talk a little bit more about what brands do and how we see that playing out. Now, the reason we believe that tech is important, and it's driven out of the fact that the tagline for India should almost be fragmented. Because in general, we see fragmentation across the board, whether it's political parties, cuisines, cultures, languages, anything of the sort. And technology is finally the one platform that's unifying it. This is a picture of Google and the Indian Railways partnering to actually provide free internet connectivity at the railway platforms. So you get 24 Mbps free for an hour, and then after it drops to 1 Mbps. That's changing the dynamic, and I think that's bringing technology down to a broader base. This is just one example of it. But even with that, you take YouTube, for example, in India, they actually allow you to download content, which they didn't allow you to do in other markets. So all of this is actually shifting and opening up new opportunities to actually create brands in a country where we've actually not had deep brand penetration. And brands and tech are actually the future of where things are going. If you just look back in 2001, tech companies represented 15% of the total value of brand businesses out there. That's jumped to 33%. 5 out of the top 10 brand companies as ranked by Interbrand are now technology businesses. Some of those didn't exist 20 years ago, 25 years ago. And you take Apple, for example, it reinvented itself 25 years ago. So I think the impact that technology and brand bring together is actually phenomenal. And I think that's really what we're looking at, and that's what we're trying to understand as we invest in companies. And it's not just us. I think if you look at this, you're seeing a shift among the largest of the players in India to understand and appreciate the fact that the world is moving from oil to now data being the new oil. They went from 9% of their revenue 3 years ago being from the consumer side to 22%. And I came across an article this morning that said it was their consumer business that's now driven them even higher as the largest revenue company in India. So I think these shifts are being recognized across the board, and I think it's going to be an important part of every business going forward. And so when we think about these shifts, you also start to think about how to engage with consumers. And I think being conscious of the fact that traditional marketing methods aren't necessarily going to be the way to do it. Instagram, for example, is a phenomenal way to engage, a phenomenal way to understand your customers. The one to me that's really surprising is Royal Enfield. And Royal Enfield has built a phenomenal brand and a phenomenal following without a ton of spend on marketing. And they have great, deep engagement on Instagram. And I think that if you look at that, even when you compare it to some of the companies in the US that were born on the internet, whether it's Rent the Runway or Casper, you can see that Indian companies are really engaging in this world, and consumers are getting that direct engagement back. So I don't think it's feasible anymore to build a brand just by putting up a hoarding or putting up a TV ad and saying, get a celebrity, they will tell you what it is, and you don't have to listen to your customer. Your customers are going to engage much more directly and much more consistently with you, and you have to figure out how you're going to build that out. And I think that all of this engagement, all of this exposure is actually enabling new formats to kind of come about in parallel with other markets. Now, I'm not necessarily saying that it's fully successful yet, but what I am contending is that these types of models are coming about much faster because the exposure the consumers have through whether it's streaming content online, social networks, just the pure exchange of information is now giving birth to a cafe culture, which is actually driving the closure of some of the QSRs, for example, and shifting the format of how people need to think about it. And so what I feel consumers are looking for are really global lifestyles at accessible price points. And I think that brands are actually doing a great job in India of delivering that. I think quality is no longer one of those things. You know, one of the unfortunate statements or byproducts of slang in general is jugaad. This idea of jugaad, it's okay. I put 4 wheels in a box and I have a car. Why do I need to worry about anything? It's good enough. And I think that that's shifting. And I think that mindset is shifting because consumers are actually demanding better quality products. And brands are delivering it. And I think we're very impressed with what we're seeing from companies out there. And I think global players are recognizing it as well. Whether it's Muji or Uniqlo or IKEA or Nike or Adidas, they're all putting a tremendous amount of importance on the fact that this is going to be a large consuming market going forward. They have the patience, they have the wherewithal, they have the capital, they have the knowledge, and they're now saying, look, we're going to come here and we're going to play this market in a unique way, in a different way than they may have in other markets. And so all of that is combining together on the aspiration side as well to drive consumption differently. So ultimately for us, when we think about how these brands have to get built, on one side I mentioned earlier, technology is a base. You must have it in some way, shape, or form to create some differentiation in your overall cost structure. But then when you start to think about the brand, I mean, brands are built at that intersection of aspiration and affordability. Now, for example, I think the Tata Nano was an engineering marvel. But the unfortunate part about the Nano was it was tagged and billed as the world's cheapest car. There's no aspiration in this idea of driving the world's cheapest car. I would rather drive a scooter and go to work every day and be absolutely happy with that. And you want to create some feeling and emotion. And I think that at the same time, not everyone can afford the Ferrari. So how do you bring these two together? And that's really where brands end up getting created. So coming back to the food world, and I'm not sure if Sagar talked about this morning, I wasn't here, but Beiruz is a biryani brand that, interestingly, in the journey of Fasos, and in the journey of Fasos, we actually originally launched biryani in under Fasos as a product. And we tried to scale it up and tried to kind of move the price point of a Fasos customer up. And it wasn't that easy. And it wasn't that easy to sell that biryani, and it wasn't that easy to convince people that Fasos, as a wraps and rolls brand, could actually make biryani. But what the team did is they went back, they sat down, and they created a whole backstory around biryani, around Beiruz, around the kings and the battle that took place. And it wasn't just an ad that was created. I think it was actually a 7-story book that they created that was actually a comic book that they put out. And they said, look, this is what it's all about. And they created this sense of emotion around it. And that, combined with an infrastructure that allowed us to experiment very easily with it, allowed Beiruz to actually build and grow into a very, very successful biryani brand, and one that we're continuing to build upon. So now, just talking a little bit about food, and I mean, this is the Dark Kitchen Summit, so I'm not sure I really need to say much about this, but nonetheless, I'll point out how we've looked at this market. If you look at the US and China, you have 75 chains that have over 500 locations in the US, 25 in China, and 3 in India. And it's unfortunate that the 3 in India are actually not even Indian cuisines. But we can appreciate why. Rent to sales ratios, you're paying Manhattan or New York style rents, and you're getting, unfortunately, rupee revenue here. And so it's a very hard business to scale up in that manner. And so, but overall, it's a very interesting market because ultimately, if you're able to figure this out correctly, and what we kind of understood at Rebel over time was that kitchens and restaurant businesses follow a linear curve. You're going to continue to grow costs every year based on the rate of inflation. You have to keep buying more onions and tomatoes. You have to keep hiring people to run it. And that continues to grow at the rate of inflation. When you set up a new restaurant, outside of the dark kitchen world. You have to put up a certain amount of upfront CapEx. Once you put up that upfront CapEx, you're now underneath your cost curve for a while. And you stay underneath it because you have to drum up excitement. You have to spend on getting people to propagate word of mouth. You get people coming in, and then eventually you cross over, and you come on top, and then over time it'll plateau and come down. Now, unfortunately, only 65% of the restaurants that get into the game have the chance to even play that and ride that journey. 85% of them shut down within 5 years. So the concept with Rebel was the idea of, look, if I built the infrastructure once, whether I'm running 1 brand or 5 brands out of it, what should it matter? And we heard from Swiggy's access business as well, similar concept, I imagine, where the idea is, look, I can leverage my infrastructure over multiple brands, ride multiple S-curves, and ultimately deliver a business that's actually much less risky from that perspective. Now, this has worked well for Rebel. They've moved from 350 restaurants to 2,000 in 2.5 years. And I think the leverage that comes on that is tremendous, because suddenly you're able to grow revenues exponentially compared to the pace at which you're actually growing restaurants. And I think that that's one of the things that was most exciting for us. Here again, it's the marriage of technology with the understanding of how to think about brands that has made that business really attractive to us. And again, one of the reasons why I was excited to come and talk and listen here today was that food really is the last frontier. If you look at it, Amazon, Walmart, Uber, Hertz, Netflix, Blockbuster, everybody has been disintermediated by technology. Yet, the largest food service company in the world remains McDonald's. Nobody anywhere has done it. And I actually think that in India, because of the unique aspects and the unique characteristics that exist here, the fragmentation that exists, the lack of brand penetration, the low cost of delivery, all of these combine to actually make this an ideal ground from which we can actually build and scale this business. Rebel is one. I'm sure there are many others here that are also going to attack this opportunity. I think we're excited to learn more about those. So, given that backdrop, I thought I'd just talk a little bit about what we think this means for entrepreneurs going forward and some thoughts on what might be interesting and useful to think about. So one is the problem big enough? Now, I'm not saying that food itself is not a big problem, but often what happens is people take that down to a narrower and narrower segment. So you have to understand, is the food problem big enough? This, for example, is a problem in fashion. So in fashion, you just take a business like H&M. H&M, to do $5.5 billion in revenue, they hold $4.5 billion of inventory. This isn't a business that operates on 52 micro-seasons. So I don't care whether you like the environment, don't like the environment, or worried about it or not worried about it. It's a bad business model. If you're operating on 52 micro-seasons and you're holding inventory that's at least 9 to 10 months old, then that's gonna hurt over time. You're gonna sell at discounts. Burberry took that a step further and actually lit on fire $300 million of inventory because they didn't want it being sold in the secondhand market. That's a big problem. And so I think that's interesting. And so actually recently as a fund, we announced an investment in a custom shirt business called Bombay Shirt Company, which is going after this idea by operating on a no inventory model. Similarly, can you create a solution for what is that's better than what is currently out there? This is a graphical depiction of how Melora, a jewelry brand, works. We really looked at it and said, look, design is really important. If you're going to think about jewelry, you're going to think about high-end jewelry. The average selling price of what we sell at Melora is about 18,000 rupees. People are buying this in tier 2 and tier 3 cities as well. 40% of what we sell is there because they just don't have access. But they want access to well-designed product. So you have to build design well. You have to figure out manufacturing effectively so that you can actually produce just in time. You want to build a brand that resonates, again, for consumers, that means something. So how do you talk about it? What's the language that you use? And when you think about distribution, we've opted to go online only there. By going online only, we have no inventory and negative working capital. These are real metrics that matter as you're scaling up your business. So today, we're able to see growth in that business that's over 15% month on month on a reasonable base that's actually driven out of the fact that we don't have to worry about working capital issues in it. Finally, can we find a product that really sits at that sweet spot between affordability and aspiration? This was a product called the Pod that Furlenco designed. It's your all-in-one everything. Now, it may not be our best-selling item out there, but it is one of those things that just makes you say, wow, that's kind of cool. If you're single, you have a place of your own, or you're living with roommates, you have everything here. You have your speakers, you have your TV, you have a PlayStation, you have a USB port, you have a lamp. It's your everything. So it kind of elicits some emotion from you. And so can we keep finding those, and can we ensure that we create products that incite that emotion within people? So I'm conscious of time, and I think we're wrapping up. So in summary, I would really say, look, can we think about the values, the business, and the technology together? and try to find those points that really, that really resonate there. And can you find cost structure advantages? I highly emphasize that, saying that as you think about your business, compare it to the existing guy and see why is your cost structure advantaged over them, and how will you use that cost structure to build a brand and scale up from there. Time's up. Thank you.